What is a good cash-secured put strategy? Here is an example of a solid cash-secured put strategy that traders can employ. Stock selection. Choose an underlying you wouldn't mind owning at a lower price. Look for stable blue chips, rate, or ETFs trading in a defined range. Avoid meme stocks. Strike pricing. Sell puts slightly OTM, around 5-10% below the current stock price. This increases odds of expiration without assignment. Position size. Limit each trade to 5 puts or less as part of an overall portfolio approach. Max out at 10% of your assigned put buying power. Expiration timing. Focus on monthlies, but consider weeklies for higher income potential. Close positions before expiration for flexibility. Entry and adjustments. Enter when implied volatility is high from dips/events for inflated premiums. Be ready to roll puts if needed to keep writing premium. Profit taking. Close positions for a 50% profit on the put sale, or let expirations pass OTM for keeps, repeating the process. Risk management. Use collars in high Roman IV environments, tight stops if breached, and don't be greedy. Preserve your capital at all times. By methodically employing this cash-secured put strategy with discipline, you can generate consistent options income while waiting for attractive entry opportunities in underlying stocks or ETFs. Get more info from the link below.